The headlines are discouraging. The news is just not good at all. And we've seen the results of the market today, and it's worth talking about because at the end of the day, we are looking forward to those green days. We forget that the red days do occur, and they often occur quite regularly. And for that reason, it's very important to be able to talk about this so that we can keep our emotions under control. When it comes to investing, there's always a risk of losing money. There's always a risk of making a lot of money as well. But without investing, what other options do you have? You can either keep your money in the savings account where you're measly making, maybe 2-3% on your money if you're lucky. Or if you leave it in the checking account where you're making 0.01% in most of these banks anyway. Now we can always consider high yield savings account. We can always consider things like CDs. We can always consider peer-to-peer lending. And I talk about these things on my channel. But one of the greatest ways to invest really is the stock market. And let's talk about this today. If you're new here, welcome. If you're a returning subscriber, thanks for tuning in again. And this particular video, I want you to know that what really inspired this is the headlines. Oh, Dow tumbles 1,000 points. S&P 500 posts worst day since 2022. And the list goes on. Some of these favorite stocks currently, especially the tech stocks, are down by a lot in one day. And that's understandable because things are really going on in the world. We have the job report on Friday. We had the whole Israel conflict going on and Iran. We have the sale by Warren Buffett selling half of his stakes in Apple. And all of these things are all coming out at the same time, and they are all spooking the market. And this is really expected to continue for the next few days. We all don't know what the future holds, and that's not the goal of this, all right? When it comes to investing, your goal isn't really to predict what the future holds. It's okay to maybe try to trade if you can, but I don't encourage that because it's like you're trying to gamble, and that's not what we want to do. Our goal is to find companies that we believe in and buy them regularly. Now, on days like this, or when you have consecutive periods where the market is just taking a bath, right? That is the time you want to go in and scoop your own shares. We want to be on the other side, not on the consumer side. And I shared a video, I believe last week, where I talked about what side are you on? Are you on the investor side or the consumer side? Which side do you want to choose to be? It's really up to you. And your ability to change your mindset and be on the investor side is where I hope that you head towards, because hey, our goal is to build financial wealth, especially as immigrants. Our goal is to be able to have a solid financial future, and that often requires that we take some risks. However, there's certain levels to risks. There's some risk where you're just trying to gamble. There's some risk where you're just trying to trade. There's some risk where you're actually investing. In one day, the S&P 500 is down 3%, about 160.23 today. And if we just go back in 5 days, it's down 5.34%. If we go back 1 month, it's down about 6.8%. And I know, hey, this is terrible. This is not good at all, right? But let's go back 6 months. It's up 4.93%. Nothing stellar, but it's still up, and we would always take the gains. Let's look at year to date. Right now, at the recording of this video, the S&P is up about 9.35%. Does this change your outlook on how you're seeing some of the headlines? Like I said, Dow tumbles 1,000 points, S&P 500 posts worst day since 2022. Does that change any of that perspective for you? Let's look at Dow, for example. The Dow Jones, in 1 year, the Dow Jones is up about 2.62%. And honestly, not a lot. Okay, not a lot in 1 year. Year to date. In 1 year, all right, the Dow Jones is up 9.11% and the S&P is up 14.78%. I mean, we can add more of these indexes to this chart. We can add the Nasdaq, we can add the Russell, and you can see all of them in 1 year. The S&P is up 14.7, Dow 9.1, the Nasdaq 15.9, we have the Russell 4.1. Now, does that change how you're seeing some of these headlines? Like I said, these headlines have been very, very dramatic in how they express or describe what is going on. When in reality, if your goal is to hold and keep these things long term and buy the good stocks, I always say this, it's very important that you keep your investment in good stocks, buy stable companies, or if you don't want to buy individual companies, look for ETFs to invest in. ETFs are generally diversified and you are able to buy a basket of companies at once. Now, I also want to share a quote. I can't remember exactly the details of this quote, but when you go, when the market is down, you want to find the opportunity to scoop up as many shares of these companies as you can. Now, what you go to scoop up those shares is really up to you, depending on how much you have. If you go and buy just one share of one company when it's down, when you can do maybe 10 or 15, now you don't have to go all in at once, but you have to have that mindset that when things are on discount, that's when you want to buy the most of it. And understand that the market can still fall tomorrow. And to be honest with you, I am looking forward to the red days more than the green days. Now, it's always a mindset game when it comes to investing. Your ability to look at those red days and find opportunities, understanding that as long as the companies, the fundamentals of the companies are looking good, the fundamentals being how are they earning, how are they producing, how much are they keeping, their profit level, right? And the products they're making, how solid are they? Then long-term basis, long-term goals should seem like a no-brainer for you because, hey, if I can hold these companies long-term, then I should be able to hit my goals. And that is really what we're trying to do here. If you are trying to trade on a short-term basis, then you may struggle because when you see red days, you don't want to buy, you want to stay on the sideline. And there's nothing wrong with that. If that is your strategy, if that's your approach, you always have to then time the market. But when you are buying these companies long-term, understand that in the short term, all right, in the interim, you may experience a bit of loss. You may be down 1%, 2%, 3%, even 10%. But as long as you have a long-term approach and you regularly buy and you regularly hold these companies, you are more likely to do well because guess what? These companies would eventually turn around, the economy would turn around, and all of these headlines like this would seem like nothing in the long-term approach of investing. It would seem like nothing really happened during these times. So your goal here is continue to keep your emotions in check. That should be the goal right now. Don't let these headlines sway you from keeping that long-term approach. If you know that you cannot hold this type of investments because today they're up, tomorrow they're down, then maybe you want to find something safer to invest in. But you also have to understand that when it's too safe, then your rewards, the gains are also going to be very minimal. So there's always that chance of not making as much money as you can if you're playing it too safe. So the goal is to find the vehicles that would help you accelerate your earning potential, and that's just the truth about it. And that's why we need to have that mindset that this is really nothing in comparison to a crash. By the way, this isn't a crash just yet. This is not a crash. Yes, we are seeing some corrections in the market, but this isn't a crash. I hope you found value in this one. If you have, don't forget to drop a like on the video. I'd love to see you in the next one.